In Money Watch News today, it was a flat day for U.S. stocks. The Dow Jones ended virtually unchanged.
The Nasdaq and S&P also closed the day relatively flat. Both fell just around 0.25%. Joining us now in Studio 57 is Javier David. He is a CBS News contributor and a managing editor for business and markets at Axios. Also joining us from the floor of the New York Stock Exchange is J.D. Durkin. He's a host for financial news website The Street. So welcome both of you, and thanks for being here on a Friday, TGIF, right?
TGIF.
All right, let's start with the Federal Reserve, because earlier today we know that President Biden announced his nominations for top positions in the central bank, including current Fed Governor Philip Jefferson for vice chairman.
Right.
So what kind of impact did this have on the markets?
Well, the funny thing about Federal Reserve nominations, they're pretty staid impersonal affairs. They're not like you're not going to get the Kavanaugh hearings unless you're former President Trump, who nominated a couple of controversial nominees several years ago, and both got rejected. But I think the thing to keep in mind here is they're all sort of career economists. This is pretty much the mold. One nominee is Latina, which is something that has come up a lot over the last several years or so, about the diversity of the Federal Reserve, the people that make the decisions. Do they really reflect the public? I think that, it's just coming at a time where there's a lot of reshuffling. Leo Brainerd has departed to join the White House. I think it's a precarious time. We're still talking about inflation. We may be facing a recession. It would be interesting to see, and I don't have any particular information on this yet, but are they sort of hawkish on inflation, or are they doves? And I think that's going to be more or less what sort of sways the conversation.
JD, so Javier talks about this being a precarious time. How important, JD, are these nominations at this particular moment, following 10 consecutive interest rate hikes, and as inflation, as Javier noted, remains above average?
I would argue, in particular, the nomination here of Adriana Kugler is crucial. She will be, if she gets bipartisan support in the Senate, a voting member of the FOMC, and that's important to keep in mind. And to Javier's point, it's not entirely clear based on previous public comments how dovish or how hawkish she will be. With regards to Philip Jefferson, though, in that role of vice chair, you're largely backing up Fed Chairman Jay Powell. So I would argue, haven't really seen a lot of big movement in the major market indexes over this. I think the eyes really tend to be on the Fed Chairman himself. We have heard from Mr. Jefferson recently, right in lockstep with Fed Chair Jay Powell, to say inflation is still pretty stubborn. We maintain our long-running course, our base case that inflation needs to get back down to 2%. Politically, I would argue it's going to be really key to watch. Let's remember, I'm reminded of people like Ketanji Brown Jackson when she was nominated to the Supreme Court. You had Republican senators who had backed her for previous roles, who suddenly then pivoted and found reasons not to put her onto the Supreme Court. I'm thinking specifically of Senator Lindsey Graham. No indication that would happen here, but even though she has been up for previous positions, Ms. Kluger, that is, it would be interesting to watch if you have any Republican senators who begin to deflect a little bit and not necessarily back and give her the support they've given her before.
All right, JD, I also want to ask you about Twitter. Elon Musk has named NBC Universal Global Advertising Chief Linda Yaccarino as the next CEO. How has Wall Street reacted to that news?
I think when you talk about anything Elon Musk related at the intersection of Wall Street, it goes all eyes onto ticker symbol TSLA. That is, of course, the stock for Tesla, and that is a stock whose value has been hammered since April of last year. Whenever Elon Musk first put out this idea that he wanted to buy Twitter, Tesla investors were saying, for the love of God, please don't. Please stay focused on the company. But that has not been. Obviously, Elon Musk is very prone to distractions. This is a man who wants to have his hand in many pots. So we did see an interesting pop in Tesla stock yesterday. Unfortunately for Tesla investors, there was a big software recall in China overnight, dragging the stock back down. But I think this will be welcome news. And people like Dan Ives over at Wedbush, other analysts who follow Tesla stock very closely, say, finally, this long-running albatross of Elon Musk being the CEO of yet another company that might distract his priorities away from Tesla can finally be removed.
And so, Javier, I want you to weigh in on this. The hiring of Yaccarino, do you think that's going to bring stability to the social media platform, or more changes?
Two things that stick out about me about this particular appointment. Yaccarino, she's well-respected. Real known quantity in advertising. Monetization is a really big thing for Twitter now. They're really trying to sort of stabilize the advertisers. A lot of advertisers have bolted the platform. She really does bring some sort of advertising heft. I think people like me thought that he might go with a technologist. It's interesting that, again, that she has an advertising background that's really key. The second thing is it seems like he's importing the Gwynne Shotwell model to Twitter. And Gwynne Shotwell, for those of you who don't know, she's the president and COO of SpaceX, not someone who you see in the news a lot, just really behind the scenes, really nuts and bolts, strong administrator, strong leader, sort of sits behind Elon. Well, I don't know if you want to call it sit behind Elon, but she just does her job, and she's not in the news. But super efficient, super well regarded. And I think that that's what Twitter needs at this point. I think someone who has a really big personality, who's smart, who's visionary like Elon, needs a stabilizing presence.
Well,
and I think that's what she serves here.
So let's shift gears to the new Consumer Price Index report released earlier this week. Annual inflation cooled last month, but only to a slightly slower pace of an increase than the month prior. Was this report good news, or were economists underwhelmed?
Yeah, I think it's modestly good news. It shows that inflation is moving in the right direction, but we're not at the point at which the Fed will pivot to either a rate cut or even a pause. We are expecting that we'll get one more next month. It's still sort of up in the air. But, you know, moderation is different from having defeated inflation. And we're not at the point in which we can say that inflation is completely off the table, because it's just proven to be a lot more sticky. The jobs market is still cooling, but relatively strong. All of the factors that contribute to higher prices are still in play.
JD, new unemployment claims jumped to their highest in 1.5 years last week. How might this indication of slowing labor demand, coupled with cooling inflation, be impacting investors?
I think similarly to what Javier just said with regards to CPI data, directionally, there are points of data to look at that say, okay, we are more or less heading in the direction that the central bank wants us to see. But yet we cannot forget at the same time, we also saw hiring tick back up in the month of April. That's probably not necessarily what the central bank wants to see. And we know that unemployment still remains at its historic low. So while, yes, directionally, there are sort of anecdotal points of data that we get every few days, including initial jobless claims that seem to indicate a bit of relief, a bit of tension being let out of the labor market. You then have other data points that fly directly back into the face of that. Inflation still remains stubbornly high, and the Fed is arguably a bit closer to winning its war on inflation. But I think all economists know that battle can still be lost. And I think we see that kind of uncertainty reflected in the markets. It's the second consecutive week of both the Dow and the S&P ending negative. The same for those two indexes being down 3 of the last 4 weeks. And I think if you look at the 11 sectors of the S&P 500 right now, investors are kind of in wait and see mode and are being hesitant to move too dramatically up or too dramatically down.
And Javier, before we go, do you think there will be another interest rate hike?
I'd say 50-50. I just believe that the Fed, one of the things that we've talked about a lot lately is data dependency. The Fed watching the data, using that to make a judgment about whether or not it's time to hit the stop button. And again, because the data is showing that things are moderating, the Fed is still very laser focused on inflation, and they've got to do it and defeat it in a way that doesn't cost them their credibility.
All right. JD Durkin and Javier David, thank you both very much.